Hey there, and welcome to Smart Money Explained. If you've ever thought about investing but felt like you needed thousands of dollars to get started, this video is for you. Today we're going to break down exactly how you can start investing with just $100. By the end, you'll know where to put that first $100 and how to grow it over time. Let's get started. Disclaimer: this video is for informational and educational purposes only. I'm not a financial advisor, and this content is not intended as financial advice. Please do your own research or consult with a financial professional before making any investment decisions. Before diving into investing, it's important to take a step back and ask yourself a critical question. Why am I investing? Your goals will shape everything from the types of investments you choose to the amount of risk you're comfortable taking. Are you looking to grow your money steadily over time? Maybe you're saving for a big milestone, like buying a house or planning for something long-term, like retirement. Or perhaps you just want to dip your toes into investing with minimal risk and see how it works. For example, if you're saving for retirement, you'll likely want a long-term growth strategy, focusing on investments like ETFs or diversified portfolios with steady returns. On the other hand, if you're experimenting with the market to learn, you might start with something low risk, like fractional shares of well-known companies or a robo-advisor that manages investments for you. Your goals will also influence your timeline and risk tolerance. If you're investing for a long-term goal like retirement, you have the advantage of time and can take on a bit more risk to potentially earn higher returns. But if you're saving for something in the next 5 years, you'll want to prioritize stability and protect your money from major market swings. Remember, having a clear goal keeps you focused and prevents you from making emotional decisions. It also helps you filter out options that don't align with your purpose. Every investment decision should tie back to your why. And don't forget, your goals can evolve over time. Maybe today you're focused on short-term growth, but as your confidence builds, you'll start setting bigger, long-term goals. That's perfectly fine. The key is to start with a purpose and adjust as you go. By setting clear goals, you're creating a roadmap for your financial future. You're not just investing money, you're investing in yourself and your dreams. So take the time to define your why and let it guide every decision moving forward. Now that you have a goal, it's time to choose an investment platform. There are a lot of options out there, but for beginners with small amounts, certain platforms make it super easy. There are great beginner-friendly platforms that offer low fees and often require no minimum investment to get started, making them ideal for anyone starting with just $100. Let's say you use a platform that rounds up your purchases and invests the spare change. This kind of tool can help your $100 grow automatically with every purchase you make. Now, let's dive into some options you may consider to invest your $100. I'll talk about 3 beginner-friendly options: ETFs, fractional shares, and robo-advisors. Option 1, ETFs. ETFs, or exchange-traded funds, are like baskets of stocks that you can buy into. They're affordable, diversified, and you can start with a small amount. Look for low-fee ETFs with a good track record. Next up, fractional shares. There are platforms that allow you to buy a slice of a stock, so you don't need hundreds or thousands of dollars. For example, if a certain stock is $3,000, you can buy a $10 share. Finally, robo-advisors use algorithms to invest on your behalf. You simply choose a risk level, and they'll do the rest. This is ideal for hands-off investors. I recommend doing a little research if you want to explore these options. Even though you're starting with $100, compound interest has the potential to turn small, consistent contributions into significant wealth over time. So, what is compound interest? Simply put, it's when your money doesn't just earn returns, it earns returns on those returns. This creates a snowball effect, where your investment grows faster the longer you leave it untouched. Let's break it down. Imagine you invest $100 today and add just $10 every month. With an average annual return of 7%, which is a common return rate for diversified investments like ETFs, your investment grows beyond what you contribute. After 10 years, you'd have contributed $1,300 total, but with compound interest, your account would grow to around $1,500. That extra $200? It's the returns on your returns, thanks to compounding. And here's the exciting part. The longer you let compound interest work, the more dramatic the growth becomes. At 20 years, the same plan grows to over $4,500, And by 30 years, you'd have more than $10,000 from just small, steady contributions. That's the power of starting early and staying consistent. This is why starting early, is so important. Even with small amounts, time is your best friend when it comes to growing wealth through compounding. The earlier you start, the more your money can grow. Investing isn't about getting rich overnight, it's about staying consistent over time. Even if you start with small amounts, making regular contributions is the key to building long-term wealth. Consistency helps you take advantage of market growth and compound interest, and it reduces the stress of trying to time the market. Remember, investing is a marathon, not a sprint. Think about it this way. If you invest $10 every week, that's $520 a year. Over 10 years, you've contributed $5,200, but with consistent growth, that investment could grow to nearly $7,300 at a 7% annual return. That's the power of sticking with it, even with small contributions. It's also important to keep learning. The more you understand about investing, the better decisions you'll make. And don't let market ups and downs discourage you. Markets naturally go through cycles, but history shows that they tend to recover and grow over the long term. One of the easiest ways to stay consistent is by automating your investments. Platforms like Acorns and Robinhood allow you to set up recurring investments, so a set amount is automatically invested weekly or monthly. This removes the guesswork and helps you stay on track, even when life gets busy. Automation not only keeps you consistent, but also helps you build wealth without the emotional stress of deciding when to invest. Plus, it's a great way to make investing a habit, just like saving or paying bills. Consistency is your superpower in investing. By automating your contributions and staying the course, you're setting yourself up for financial success in the future. Small steps today lead to big results tomorrow. So there you have it, a simple guide to getting started with investing, even if you only have $100. The journey to building wealth doesn't have to be intimidating or require huge sums of money. What matters most is that you take that first step and stay consistent. Every small investment you make today is a step toward a stronger financial future. And if you're ready to dive in, there are beginner-friendly tools that make it super easy to start investing. Whether you're looking to buy fractional shares, explore ETFs, or use a robo-advisor to simplify your strategy. Remember, investing isn't just about money, it's about building confidence, learning, and taking control of your financial life. No matter where you're starting from, you have the power to grow your wealth over time. If this video helped you, don't forget to hit that subscribe button for more practical tips on investing, budgeting, and personal finance every week. We're here to help you navigate the financial world step by step. Also, drop a comment below. Are you just getting started, or do you have any questions about beginner investments? I'd love to hear about your goals or help you out with any challenges you're facing. Let's start a conversation. Your financial journey starts with just one small step. Today it's $100. Tomorrow, it could be the foundation of something much bigger. You've got this.